So we are a country, all of whose debts, government debt, private business debt, and private household debt, are all at record highs. That's an alarm bell. To give you an idea of one of the meanings of it, this coming year, we will all be paying taxes to go to the government, and it will cost the government something on the order of between $600 and $800 billion of our tax money that doesn't pay for schools or hospitals or roads or anything we want. It's just interest on all the debt the government has assumed. First part of the question is yes, they not only are they planning to, they have already over the last 20 years, and particularly over the last 5, the countries in the BRICS, and by the way, some others as well, have reduced their reliance on their use of the dollar. You know, the dollar as the global currency was one of the results of World War II. When I pointed out a few minutes ago that all the competitors of the United States were pretty much destroyed in that war, and that we came out kind of top dog in that situation, that's what translated into making the dollar, quote, as good as gold. It was something that every central bank of every one of the 180 countries in the world kept on reserve in their bank in order to show the world that their currency was safe to use, because in any extremity, they could honor their currency by giving you dollars, which the world accepted as, quote unquote, as good as gold. So, for example, 30 years ago, something like 80%, maybe 85% of world central banks held dollars as reserves. They held dollars, literally gold, and maybe a small smattering of euros or Japanese yen. Now the number is disputed, but it's around 50 to 60%, much, much lower in the form of dollars, because they don't need them so often. What the BRICS have started to do, and they're having huge discussions. One of the major topics at the meeting of the BRICS in Kazan, Russia, 3 weeks ago was all about replacing the dollar. They are now, for example, conducting huge parts of their trading exchange in other currencies. It used to be, up until 3 or 4 years ago, that if country A needed to buy oil, for example, from Saudi Arabia, or country B, they paid for it with dollars. Everybody had to have dollars in their account because much of the world's trade was conducted in dollars. Neither the exporter nor the importer wanted to worry about exchange rates among many different currencies. The dollar was safe. The dollar was secure. The dollar was backed by the United States. All of that is gone. And what you're seeing is the BRICS leading the way, and they're discussing whether to develop a more sophisticated regime using computers to allow countries to trade in their own currencies, or to come up with a new global currency that will compete with the dollar. And my guess is they're going to go with one of those two, and that those decisions, it'll take a little time. The United States is still a very important, big, rich country. But so it'll take, I don't know, 5 years, maybe more, to get that in place. But already you should be aware that the dollar is less and less of an international currency, and less secure. All these kinds of questions mean that dealing with the United States, let me give you a couple of other examples. Part of the war against Russia involved the United States using its international position to steal, I mean, there's no other word for it, to steal Russia's dollar holdings and gold holdings that Russia had kept in European banks because they need to do business with Europe all the time. Well, that money in the European banks, the American bank, was seized by the United States government. Europeans did that in Europe too. $300 billion, an enormous amount of money. The Russians, by the way, you know what they've done? They've just started seizing US and European assets inside Russia, and there are a lot of those. So there's a whole, but you see, if you were the dominant player, US, then all of these developments damage your situation. No matter how fast it goes, it's less for the US economy, less for the US dollar. That's what's going on. As to the debt, absolutely, the decline of the American empire is shown by the fact that just like you and I in our personal lives, we would like to be able to earn enough money to buy the things we need. End of story. We don't want to be in the position of borrowing. Because if, for example, I can't afford to buy an automobile, I have to borrow the money. And in case you haven't paid attention, when you borrow money to buy a car, the car ends up costing you more than the price you paid because you have to pay interest on the loan with which you bought the car. So if the more people are indebted, the more everything costs them. When you hear about an inflation, you may think, oh, it's only about the price of a dozen eggs or a quart of milk or a loaf of bread. It is all those things, but it's also the level of debt that adds to everybody an interest cost. You see that at the end of the month when you get your credit card bill. There you begin to see you're going to have to pay a lot of money that in the end is about the eggs you bought, but you paid a certain amount at that time, and then you have to pay interest on what you borrowed to buy those eggs. Debt is a sign that an economy is having trouble, okay? The debt of the United States now is at an all-time high. That's the government debt. But you can also look at corporate debt. The debt of corporations is also at an all-time high. And the debt of individual households is just below the all-time high and about to surpass it probably next year. So we are a country, all of whose debts, government debt, private business debt, and private household debt, are all at record highs. That's an alarm bell. To give you an idea of one of the meanings of it, this coming year, we will all be paying taxes to go to the government, and it will cost the government something on the order of between $600 and $800 billion of our tax money that doesn't pay for schools or hospitals or roads or anything we want. It's just interest on all the debt the government has assumed. And who gets it? Well, of course, the people who lend to the government. And if you've never had a visit from a government official negotiating with you about how much you're going to lend to the government, then you already know that where that interest goes is not to you. It's going to corporations and the rich who have the money that they lend to the government. In order to let me drive it home to you about the bizarreness, the American government is the most indebted government on this planet. We are number one debtor country. And the two countries that have lent to us the most are Japan and the People's Republic of China. They are the two largest creditors for the United States, who is the largest debtor. Another alarm bell ought to go off. Whoa. But now let me enjoy with you one of the implications that the Chinese People's Republic of China is a major creditor. They own about, get ready, 700, give or take, $700 billion worth of the debt of the United States. The United States government has to raise taxes to collect the money to pay to China every year interest on the debt. When you borrow from China, you have to pay interest, like any borrower, from the creditor, which means you and I are paying our taxes, part of which the government of the United States collects and sends to the People's Republic of China, who can do whatever they want with billions and billions of our tax money. That's how this is being handled. And if you didn't know that, that's more denial, friends. That's more of what's going on that you are not told. By the way, is this a secret? No, no, no. Take me 5 minutes. I mean, I'm an economist, but I could take you 5 minutes to go to that government website where they'll tell you who is lending to the United States government, how much do we owe each country, how much interest flows there each year, all public information. But like everything else, something that neither Kamala Harris nor Donald Trump had any interest in discussing. They could discuss lots of other issues, it turns out, just not those that might reveal what it means to be a declining empire.
Summary. The global shift away from the US dollar as a reserve currency represents a significant change in the international financial landscape. Wolff notes that central banks have reduced their dollar holdings from about 80 to 85% 30 years ago to roughly 50 to 60% today. For investors, this suggests the importance of diversifying currency exposure and not relying solely on dollar-denominated assets, as the dollar's historical position as the dominant global currency appears to be weakening. The record-high levels of debt across all sectors of the U.S. economy, government, corporate, and household, serve as a major warning sign for investors. Wolff emphasizes this as an alarm bell for the economy. The massive interest payments on government debt alone, between $600 to $800 billion, consume significant tax revenue that could otherwise fund productive investments. This suggests investors should carefully consider debt levels when evaluating investments and perhaps be cautious about heavily leveraged companies or sectors. The changing dynamics of global creditor-debtor relationships have important implications for investment strategy. Wolff points out that Japan and China are now the largest creditors to the U.S., which is the world's biggest debtor nation. This structural shift in global financial power suggests investors might benefit from exposure to creditor nations' economies and their currencies, while being mindful of the potential risks associated with heavily indebted markets. It also highlights the importance of understanding geopolitical relationships and their potential impact on investments.